Well, you see in the lending market more and more yield compression. This will continue. There's a lot of supply in lending. We have nowadays much more sources of funding compared to a decade ago. There's a lot of competition between amongst the banks. You have insurance companies, pension trusts who are also entering more and more the market, investing directly in real estate, but also financing real estate. Besides these institutional investors, you have also alternative sources of funding. You have more and more debt funds entering the market, more and more discussions about ones to be created. So the market is good. The volumes have picked up tremendously in the last couple of years. You see here and there some cautiousness. You see in England because of the Brexit, a bit of a slowdown. This might change after the referendum. The markets in Southern Europe are attracting a lot of investors. It's pretty healthy, but also there you see yields compressing both on the equity side, but also on the debt side. Germany is characterized by a lot of competition amongst all these funding sources. Regarding project financing on the development side, a lot of projects have materialized. There is here and there by some developers already a bit of cautiousness because of the price developments recently, and also, can you continue to build in the same quality? Is very interesting to see that some are already worried if they can continue to have very good suppliers for all these projects. I mean, supply is getting a bit tight there. Besides, yield compression, shrinking margins for finance providers, of course, you see also an increase in risks. Yeah. On the banking side, I have to say, probably the last cycle is still in memory. Banks are trying to continue to be cautious, even though LTVs have gone up. And even though a lot of people say, look, the LTVs are still reasonable, one has always to see how they are calculated, and the fundamental variable, the valuation of the buildings have increased so much. Yeah, so if there would be a mistake in predicting future price appreciation or rent increases, of course your LTV of 75%, which is a good average in the market nowadays, would spike tremendously. The debt funds coming into the market, of course, competing with banks, are forced to underwrite also different risk categories, a bit more aggressive than banks to actually achieve the returns for their investors. And there's a lot of pressure coming on returns and margins also by insurance companies and pension trusts, which require lower yields than some other alternative funding sources.